Thank you, ladies and gentlemen. Forgive me if you find that I am repeating some of the points which have already been touched upon by the very distinguished speakers earlier today. When you are the last speaker, you get the feeling that the people are waiting only for one reason: they want to be entertained. Because most of the facts, because the facts don't change, and they are already covered by the speakers who come. So it is only the logic and the deductions. First of all, let me say, ladies and gentlemen, that it is always a great pleasure to participate in a POTS, Palm Oil Trade Fair and Seminar event organized by MPOC and MPOB. These two organizations are wonderful organizations that I always recommend to my own country, India, and to Indonesia to emulate. Because these are organizations which do a wonderful job in promoting palm oil, not just Malaysian palm oil, but palm oil itself. And MPOB, what used to be in the old days Porim, has done a wonderful job in expanding the usages of palm oil. Today, what are the products which get you the most value addition? Not oleochemicals. Tansri is sitting here from KLK Oleo. He often complains that he subsidizes me when I buy a fatty alcohol from him. It is specialty fats. And specialty fats have been designed and developed by Porim over the years. And ladies and gentlemen, I am going to ask you to put your hands together for Tansri Dr. Yusuf Basiron, who is very much the man who built up MPOB and now is running MPOC. Tansri, please. Now for the paper. We meet at a time of what I may call a changeover from shortage and tightness of supply to surplus and ample supply. The expected bull market as a result of the El Nino of 2015 did not materialize in a big way. And amongst the people who are very disappointed with the pedestrian performance of the market, I put my hand up too. At POC, if you remember, I told you all these forecasts of 27, 28, throw them out of the window. Prices of palm oil are going to begin with a big 3. Unfortunately, I was wrong. What we saw that the bullish portion of the market was very short-lived, and then we saw relentless selling in the market. I found later that the selling was coming mainly from the plantations. The one group of people in the palm oil industry who always get production wrong, demand wrong, are the plantations. And they were selling in June and July when we were saying, the fundamentals don't justify this. But we analysts were wrong. The market went down to 2200. And then just as we analysts said, now finished, the market is doomed, there was a tight squeeze in the BMD in the month of August. Kind of squeeze, we call it the mother of all squeezes. And the price went up, went to almost 2.9. It was a squeeze, it lasted a few days. After that, we thought now normalcy is restrained. But in Malaysia, nothing is normal. The following month, another squeeze in the BMD. And then, of course, people were looking forward to pot scale. And in grand celebration of pot scale, we went up by 100 ringgits, I think on Monday and Tuesday. So the whole cost of this conference was paid for by the bullishness in the market. And that is why I know most of you are in a very good mood. But don't worry, I'm going to spoil it. At Globe Oil, earlier on the 23rd of September, I made a bearish speech. And so far, except for the aberration in the market over the past 2 days, I have been proved fairly accurate. The inverse in the market, there was an inverse of 200 ringgits. That is gone. And I had said this inverse is not justified anymore. It will go within days, and it has gone. Now, let me take you through very quickly to territory which has already been covered by most of my predecessor speakers. It is now clear that in oil year October 15 to September 16, the oil year is always October to September. In Malaysia, palm oil production dropped from 19.872 million tons to 17.68 million tons, a drop of almost 11%. Indonesian production declined by my estimate in the same period by about 4 million tons. And that is after taking into account the recovery of August and September. So Indonesian production was really catastrophic in the first half of the year. And as Dr. Fry demonstrated, the effect in Thailand was also quite strong. Overall, in oil year 15-16, palm oil production, in my opinion, declined by 6 million tons. A decline which has never before been seen in history. Now, September has been like a turning point, but it is a divergent point. The recovery in Indonesia is very different from the relative stagnant production we saw in Malaysia. At some stage, the recovery will come to Malaysia as well. In my earlier paper in India, I tried to explain that the dry weather we saw in Malaysia in the first quarter of 2016 was quite unique and something that was not replicated in Indonesia. And that is why we will have to count 8 to 9 months from February for the recovery in Malaysia to get underway. My current estimate for calendar year 2016 for Malaysian plantation palm oil production is still around 18 million tons, but it may undershoot by 100,000 here or there, quite possible. It depends. I am quite certain that there will be a very strong recovery in Malaysian production starting in December. But because December is a seasonally down month, you will have to compare like for like. You have to be able to compare it with the rather poor production of December 2015, and you will see the difference. What happened to palm oil stocks? Between November 15 and August 16, stocks in Malaysia halved from 2.9 million to 1.464 million. Similarly, Indonesian stocks fell from 5 million tons. This is quite an individual estimate. If you ask the Indonesians, they will always tell you our stocks are 2 million tons. But Indonesian stocks fell from 5 million tons to, I believe, just 1.6 million tons. Decline of 3.5 million tons. Overall, world stocks of palm oil declined by 5 million tons in that period of 9 months, November to August 16. But the one key point to remember is that the oil palm is a very generous tree. What it takes with one hand, it gives generously with the other 12 months later. And therefore, ladies and gentlemen, we must be prepared for the oncoming 11 months of the year to see a dramatic and strong rise in production of at least 6.5 million tons. Mature acreage has not expanded as much as most of us would like it to be because of all the problems of the NGOs and others, particularly in Indonesia. But the oil palm itself, in terms of yield, will produce more. Why is the recovery in Indonesia more sharper than the recovery in Malaysia? Because the Indonesian industry is much younger. The younger palms have recovered much faster. Yesterday you saw a chart of replanting being done in Malaysia. But the replanting is done for palms which are 24 and 25 years old. But palms which are between 17 and 24 years old are also in a mature state where their recovery powers are not as strong as the young palms. And that has been the problem, the difference between Malaysia and Indonesia, and of course the drier patch, the drier weather that we saw in Malaysia, unfortunately, and which did not extend to Indonesia in the first part of this year. If the production came down so much, why did prices not rise? This is a question which has been asked before, and it needs to be answered. The last time, in 2010, when Malaysian stocks fell below 1.5 million tons, you and I know that prices went up to 3,800 ringgits. And the ringgit was also much stronger at that time. There was no 1 MDB at that time. Probably there was a different prime minister as well. Why was it that this time the market did not power ahead? The most important factor, in my opinion, is the release of rapeseed oil by the Chinese government from the state reserve. A lot of us were skeptical about it, but the Chinese meant what they were going to do, and they kept releasing this rapeseed oil. Now, this rapeseed oil is not consumed the moment it is released. Some of this original 2.5 or 2.25 million tons of rapeseed oil is still lying in tank in China because it is 11, 10. When they finished 10-year-old rapeseed oil, they said, we are going to issue fresh 9-year-old rapeseed oil. So this oil has to be reprocessed, and even after reprocessing, it cannot be bottled for the consumer. It has to be blended with good fresh oil. So the flow of this oil into the market is extremely slow. And frankly, I was a bit surprised that the Chinese restarted the auctions on the 12th of October so fast. I was expecting they would start around the end of November, because they should have given time to the old stocks of rapeseed oil to be processed and let out into the market. But clearly, once the Chinese government takes a decision, there's no looking back. And so they are going to go ahead with these releases. I believe this was one of the main factors responsible for the bull market not rewarding the palm oil industry with higher prices. The second was that demand in general was a bit weak. And the main country where we saw weak demand was India. Because India is, whatever you may say about India's growth rates and India's government, India is a price market. And that price market was suffering. Rural India was suffering because of the failure, 2 successive failures of the monsoon. 300 million people, mainly in rural India, had problems of water. People had to walk a mile, 2 miles to get drinking water. So the question of consumption just did not arise. We who are in the consumer products business in India, throughout our businesses saw a slowdown. Rural India was not only not growing, it was barely surviving. That is why consumption of veg oils in India shrunk and India's imports fell. I will show you a slide to demonstrate that. But this slowdown in demand was the second reason why the palm oil industry did not get the full benefits of the drought and the lower production. The third reason was rampant cheating by all countries on biodiesel mandates. And that includes Indonesia, Malaysia, everyone. Because biodiesel needed to be subsidized. And governments are very reluctant to subsidize, even if they have to publicly announce the subsidy. And that was the simple reason. Thirdly, world economic growth slowed down. And the big markets, this morning in the workshop, you had very beautiful analysis of the expanding markets east of Suez, west of Suez, sub-Saharan Africa. But what was these markets undergoing last year? Tremendous shortage of dollars because their biggest export, oil, commodities, were all nosediving. So these markets had a shortage of dollars. Egypt could have imported another 300,000 tons of veg oils if they had the dollars to buy. Iran was having difficulty until the Americans managed to do that deal with them. So these markets, these very fundamentally strong markets for palm oil, were suffering by a lack of dollars. And finally, of course, there was competition from soya oil and sun oil, particularly sun oil, which was the same price as soya oil and which was taking market share away from palm oil. So all these reasons, in my opinion, led to the fact that we did not enjoy the fruits of the bull market. And that is very important for the industry to keep in mind. Plantation companies, I seem to have all the luck in the world, because 2 years ago, as my friend Ivy and others will say, I started promoting the equities of plantation companies, telling people buy, these are good equities for pension funds. And these equities have gone nowhere in these last 2 years. Pension fund managers are now looking where I am. Plantation companies had a double whammy. A, production was down, and B, the prices did not rise up. Normally, plantation companies love when production is down because the price rise is much higher than the loss of production. You lose 10% production, prices rise 30%. But this time, it was the other way around. Production fell 30% and prices rose 10%. So, if you look at the workings of all the major plantation companies, they have not been happy. And I am told that was one of the reasons why, when prices rose in the month of May and June last year, the plantation companies decided, brother, let's grab the prices that we can, and they sold and sold and sold and ultimately crucified themselves. But this is unfortunately what the only saving grace for the plantation companies was that Indonesia actually, and I was very surprised that Indonesia actually implemented the biodiesel mandate. And all credit to Indonesia, because they implemented the biodiesel mandate and as a result created a certain tightness in the market which was very necessary at that time. Now I want to say a few things about palm losing market share. Look at this slide of India's imports. I have not put in an extra column because somehow I am not that savvy with computers to be able to, I thought most people have bad eyesight, so let me keep the figures large rather than shrink the figures and put an extra column. But if you look, and my paper will be available to all of you both on the internet as well, India's imports in 2012-13, India imported 10.6 million tons. If you look at our projection for 15-16, it was 15.6. Actually, we imported just under 15 million, 14.8. So India's imports went up by 50% in 5 years. Agreed? My maths is correct. India's imports went up by 50%. Do you know what happened to India's imports of palm? They remained stagnant. India imported 8.2 million tons in 12-13. India imported 8.5 million tons in 15-16. Absolutely stagnant. What happened to India's soya oil imports? India imported 1,090,000 tons in 12-13. 1,090,000 tons. India imported 4.2 million tons in 15-16. Soya oil imports expanded fourfold, 400% increase. What happened to sun oil? India imported 980,000 tons of sun oil in 12-13. 980,000. How much did India import in 15-16? 2 million tons, and now expected to import 1.8 million tons next year. So this is what has happened. Palm has been losing market share in its greatest, strongest market, India. And you in the palm oil industry must ask yourselves this question: why is palm losing market share? Not because palm is more expensive. That happens. There is one other reason why palm is losing market share. Anybody wants to guess the answer? Your governments are responsible. Both Malaysia and Indonesia have introduced what I call the inverted export tax structure. It's like hanging a man from his feet. They tax CPO very high, and they tax olein and refined oil much less. They want to encourage the refining industry, which employs a few people. What does that do to the market in India? The Indian refiners are paralyzed. They cannot compete. As Ivy showed in her statistics, the cost of olein and the cost of CPO landing in India is the same. Indian refiners, remember I have been saying for years, refiners are the gatekeepers to the market. If you fight with the gatekeeper, he's not going to open the gate for you. He'll tell you, thank you, I am opening the gate for soybean oil. Because in soya oil, when he imports crude soybean oil, he has no competition from refined soybean oil being shipped to India. He can cover his cost and his margin. But when he imports CPO, he has to compete with all the refineries in Malaysia and Indonesia shipping RBD olein at the same price. How can he survive? This is responsible. The inverted export tax structure is responsible for palm oil losing market share. And just as you have lost market share in India, you will lose market share in other parts of the world also. Today, the palm oil industry in this part of the world needs to go beyond refining. Value addition means beyond refining. Do value-added products. But allow the refining industry in your respective markets to exist. Otherwise, you are creating a conflict of interest which goes against the interests of the palm oil producers. And palm oil production is far profitable, far more employment generative, and far more lucrative than the small value addition that is done by refining. So if you are shareholders in plantation companies, next time the board of directors recommends we want to invest in value addition and form a refinery, vote against it. And tell your banks not to give advances for refining operations to palm oil companies in Malaysia and Indonesia. Tell them, invest instead in larger plantations, grow more CPO, export it, and make money. On CPO, your margins are $250 to $300 a ton. On refining, you don't even make $5 a ton. You should be sensible people. Okay. These are all the Indian and Pakistani delegates who are cheering me. Now, a few words on, as I told you, I get carried away by this. I am not a refiner myself. We were thrown out of refining by the Malaysian and Indonesian refiners many years ago. We concentrate on FMCG products, but I still feel passionately about the refining industry in Asia, in Africa, and elsewhere. In my country, we say something, Aadhi roti rehne do. It means if there is a big chapati, you have half and leave half for your neighbor. Palm oil industry should do the same thing. You grow oil palm, grow CPO, export it, and leave this little bit of chapati of refining for the industry in India, Pakistan, Bangladesh, Africa, and we will all prosper, I assure you. And then go to Dr. Basiron for value-added products. And it will be a win-win situation for all of us, believe you me. On 23rd September, the Indian government lowered the import duty on palm oil. Indian government does some brilliant things from time to time. They did not alter the import duty on soft oils. The reason was India produces soybeans, so Indian farmers will be affected if we reduce the duty on soybean oil. India produces hardly any palm oil, so they cut the duty to fool the Indian people that prices are not rising and you can have a great Diwali. In India, we have a saying, whose father's Diwali? If you remember. I believe that this rather political decision is not long-term. And after Diwali, which is on the 30th of October, the Indian government will once again quietly reinstate the full duty on palm and bring palm and soya back in line. I don't think this is a long-term measure. It's just a measure to obviate and make consumers happy about Diwali. It's a festival, and next year there are some critical provincial elections early next year in some of the states. So the government has taken this measure. I also want you to note that Indian oilseed crops this year are very good. By the grace of God, we had excellent monsoon, excellent rain, maybe too much rain also, but Indian crops are very good. Recent rains in Rajasthan and Gujarat, particularly Rajasthan, also augur very well for the next crop. The crop which will be planted now and harvested in March, which is India's principal oilseed crop, the rapeseed crop. And I will not be surprised if India's rapeseed crop next year exceeds 6 million tons. A big jump in production, it's quite possible. So overall, I would say that these projections which I have made of India's imports for 16-17, 400,000 tons of soya, 9.1 million tons of palm, 1.8 million tons of sun, total 15.3, that's a 500,000 ton jump. This will only happen if prices are low, because we have got to rekindle demand. The demand which we lost in rural India has to come back. And demand in rural India will only come back if prices are low. Let me say one other point about India. You saw the statistics of Indian consumption. Indian consumption today of actual vegetable oil is about 16 kilos per head. But as is rightly pointed out, India being largely a vegetarian country, the consumption of milk fat, dairy fat is quite high. It's about 2 kilos per head, roughly. So Indian total consumption of oils and fats per capita is already at 18 kilos. 18 kilos is a good level. World average is about 24, 25. In urban India, we are already at those levels of world average. And in urban India, per capita growth is not expanding anymore. In fact, in urban India, we have all the familiar problems of the developed countries: diabetes, cholesterol, people going for jogs, people drinking hot water, all sorts of things. The growth is coming in rural India, where the per capita consumption is probably less than 10 kilos. So rural India will only come back. You will only recapture that demand if prices are low. India is still, and I cannot stop repeating it, India is still, and I would say the same goes for Pakistan and Bangladesh also, we are still price markets. Whatever our governments may say about our development agenda, etc., we are still price markets for the majority of our people. So this demand will only come back if we see lower prices. Now most of you are intelligent and you will realize I am massaging you into a particular direction. On China, I have nothing further to add except to say that in a way I am a little surprised that they started the release of rapeseed oil so quickly, but the fact is the Chinese are going to do it and we have to live with it. Now we come to energy demand. As I said, Malaysia is doing well on the mandate. They are at B7 going to B10, but it's a small country, small population, doesn't make a big difference in the world S&Ds. In Indonesia, there is a problem. Indonesia, at the moment, the run rate is about 200,000 tons of biodiesel being produced and consumed per month. And that is what is being subsidized by the estate fund. It's not rocket science to calculate what is the income of this estate fund from the export levy. But all of us know that the export fund cannot subsidize 200,000 tons. It was able to do so only because they had a cushion from last year. They started collecting the levy in July 2015 and they started subsidizing only from November. So they had a cushion which they were able to utilize. That cushion has now virtually run out. From October, November, the fund will have to raise money with one hand and distribute money with the other hand. Next week, at the Mosta OFIC conference, where also you will see me, a very distinguished gentleman from Indonesia is coming to speak, Mr. Bayu Krishnamurthy. Bayu Krishnamurthy is the CEO and chairman of the estate fund, the man who actually runs the fund. And I think it will be very interesting to listen to him. He's going to make a speech and he's also going to participate in a question answer on the financing of this fund and the way forward. It is very important. If Indonesia's biodiesel consumption is down from the current run rate of 200,000 tons falls to 150,000 tons, which is my estimate, based on just calculating what their income is from export levies, then that is not good news for palm oil. As a result, what I have done in my SNDs is that last year, because of Indonesia, we increased biodiesel consumption by 1.5 billion tons. But for next year, I have put zero growth in biodiesel consumption. In fact, I should have put some negative, but I am still waiting for next week. And if you allow me to come to Malaysia next week, then maybe we will find out more. So now, we all know that food demand increases by 2.5 to 3 million tons every year. Last year it increased by only 2.5 million tons. This year I confidently expect it will increase by at least 3 million tons. A, because the biggest consuming market, India, is now back to normal. We expect the Indian economy to do better after the harvest from November onwards. And all over the world with lower prices, we expect demand to come back. So 3 million tons of consumption growth is a give. We may even exceed it slightly. Now we use my method of analyzing supply and demand, what I call incremental supply against incremental demand. Figures are roughly the same as what other analysts have said. I believe total supply, that means what is new coming onto the market, will increase by about 11 million tons. Last year it fell. Last year supply fell and demand grew. So the mismatch between supply and demand last year was 9.5 million tons. And mathematically you can prove it. Because what happened? Stocks in Malaysia fell by 1.5 million tons. Stocks in Indonesia fell by 3.5 million tons. That's a 5 million ton decline in stock. And don't forget, stocks in China fell by 2.5 million tons, the release of rapeseed oil. So you put all that together and you come to the deficit of 9.5 million tons roughly last year. But that is gone, that's finished. Markets look ahead. Markets don't look at what has happened in the past. Now you see supply is getting replenished and more. In my humble opinion, it's going to be a good 11 million tons more of supply coming in. Soya oil more, sun oil more, palm oil 6.5 million tons, lauric oil is also going up in tandem. And I have not even taken into account the release from China of rape oil. I've kept that out of this equation on both previous year and this year. And demand goes up by only 3 million tons. So we have a problem. and that will be reflected in prices. Now, before I talk about prices, as I always do, I say a few good things about sustainability, because this has been a great article of faith, and this is something that Malaysia has reason to be very proud of. We had a presentation on MSPO yesterday. Indonesia has started its own ISPO. I have no problem with as many POs as possible, because the more you certify, the more good practice you encourage, the better it is for the image of our industry. It's a good thing. RSPO has had a good year. But what has happened is that because of certain steps that the RSPO has taken, two of the biggest players, the biggest suppliers of certified palm oil are not there. And that has put a squeeze in the market on the premiums that people like my company had to pay. We buy what is called mass balance, sometimes we buy segregated, sometimes we buy certificates. Certificates are cheap, not a problem. But a lot of Western companies now don't accept certificates. They say, no, this is $3 a ton, this is cheap. We want you to use mass balance in what you supply us. The premium for these products has shot up because two of the largest suppliers are not there in the market. My point to the RSPO is, sustainability is good, but sustainability should not make palm oil unaffordable. That is very important. Sustainability should be available at a reasonable price so that we can all celebrate sustainability. What their steps have done is it has made sustainability unaffordable. If you do that, you will undo the tremendous progress that we have all jointly done. And I hope there are people from the RSPO here who are listening to this. You can crack the whip, but once your student has understood what he needs to do, then you must not try and kill the student. You must let the student thrive and become good. Those of you who understand know what I mean. Now, for price outlook, my assumptions are that Brent will be in a range of $40 to $50 a barrel. I completely agree with Dr. James Fry that the fracking industry in the United States is not going to take things lying down, and they will ramp up production. I also don't expect the Fed to raise interest rates until December, but almost certainly after December they will raise interest rates. I think currencies like the ringgit will be stable against the US dollar, give or take a little fluctuation here and there. I mean all the developing country currencies, ringgit, rupiah, rupee, the Brazilian real, the Argentine peso, they are all basically stable. And my assumption is that the great American wall builder will not be elected President of the United States. He is trying his best not to be elected, and I hope he is extremely successful. On price outlook, those of you who come for my papers, particularly in India, know that I propounded a concept called the Indian biting point. 60,000 rupees of CPO. This is the point where the price bites the consumer and he says, ouch, get lost, I don't want it. This is the Indian biting point. And we have found that this year the biting point worked beautifully. Whenever the price of CPO on the MCX, which is the Indian exchange, which trades CPO, went to 57, 58, 59, it came back. It never reached 60. That was the biting point. I am glad that that concept worked. But what it tells us is, and I repeat it, India is a price market. Never forget that. We have also found that this Indian biting point, when you take it a bit further, when prices go below 50,000, demand comes back. Demand expands when the price of CPO on the MCX falls below 50,000. Right now, the spot position is 53, the third position is between 49 and 51 because they also follow the MDEX. So you have to be careful with the Indian biting point. Now the biting point is Indian price. So when the duty goes up again by 5%, Indian prices will rise. So they have to go back and remain below 50,000 if demand is to come back and demand is to expand. Now if you distill the Indian biting point into ringgits with the normal duty of 12.5%, then I am afraid by the end of December, BMD futures must fall to 2200 ringgits. The inverse has already disappeared. There is still a big gap, and the BMD is now trading January, DEC and Jan. These are very good levels to lock in for the plantations. When they had a chance to get profits, they sold too cheap. And now I am afraid they are going to wait and wait and wait for higher prices until we go to 2200. But this is my prognosis that the market has to go down to 2200. I don't think the market will go down further because I think at this level, demand will come back. And it is not as if we are building up burdensome stocks. We are not building up burdensome stocks. And for that reason, I think 2200 is a good level at which the market will stabilize. What happens to soya oil? I think today soya oil is the most unpopular oil in the world. It is too expensive and there is virtually no demand. Those of you who follow the shipments out of Argentina will have realized in the last several months that Brazil, Argentina together ship about 1 million tons of soybean oil, between 800,000 and 1 million tons each month. And there is one country to which 50% of their soybean oil goes, and that is India. 50%. India's domination of soybean oil market is huge compared to its prominence in the palm oil market. And that market is slowing down on soybean oil because now palm is more attractive and Indian soybean oil is going to come in. We have a big crop between 10 and 10.5 million tons, and we are going to crush at least 1 million tons a month. We need Indian soybean prices to fall a bit further because Indian meal is a bit difficult to sell. But if you crush 1 million tons of soybeans, you get 180,000 tons of oil. That means 180,000 tons less demand for South American soybean oil. So for that reason, I believe that if palm goes to 2200, then soya oil has to fall from the present $750 FOB to $650 FOB. I believe sun and rape oil also need to go down. And the oils which were defying the forces of gravity, lauric oils, coconut oil and palm kernel oil, these are the oils which are the source of misery for the world's oleochemical industry. But I have good news for the oleochemical industry. I think the lauric oil rally is about to finish. They have started sliding, they will come down, and I believe CPKO, to win back demand which it has lost, will need to go to a normal premium of $200 to $250 above the price of palm oil. Now, something that no other speaker has told you today, I have reserved something to entertain you. Some quick thoughts on a rather improbable Donald Trump victory. What is likely to happen? If a Trump administration picks up a trade war with Mexico and China, it will be a disaster for US exports to these countries. And the US mainly exports agricultural products. So it will be bearish for US soybeans, it will be bearish for Chicago futures, it will be bullish for South American basis, and it will be good for palm oil. Because he has no fights with Malaysia, up to now at least. Or Indonesia. Oh, Indonesia, Obama was born there, maybe there will be a problem. The repercussions of a Trump presidency will be much more pervasive. Big buyers of US government debt like China. China owns $1.2 trillion of US securities. They may stop buying US debt once Mr. Trump is in the White House. In that case, who is going to buy US debt? The Fed may have to restart a big QE program, or interest rates may have to rise. And you all know that bankruptcy is a preferred route for Mr. Trump in his business life in the past. Just imagine President Trump coming on CNBC and talking to the reporters and saying, could we not renegotiate our debt with China, say at 50%? What would happen to the world economy? So I leave you with these thoughts. I know you don't have the right to vote in the United States, so it's useless. But at least think of what might happen if the unthinkable were to happen. Finally, ladies and gentlemen, the outlook is bearish because the La Nina has not developed. If a strong La Nina develops in South America, this will all change because there will be a problem in Rio Grande do Sul and Paraná in Brazil, and then it will go into Argentina. There have been cases where in the past we have lost 25 million tons of soybeans in one season, and that has changed the whole equation of the market. But we will know this only around Christmas time, or maybe in the new year, not before that. Finally, I would simply repeat what I sometimes say to people when I talk about a bear market. The seeds of the next bull market are sown in the current bear market. So before you decide to commit suicide, think of that. And with those words, ladies and gentlemen, I wish you good luck and God bless in your trading.